Bitcoin is down 50% from its highs in October, and we're now more than 40 weeks into this bear market. The Nasdaq left Bitcoin behind, gold left it behind last year, and Bitcoin is trading close to the average cost basis of the entire network. So in this show, I want to look at whether Bitcoin is finally somewhere near a bottom. I've got 4 slow, long-term indicators that won't tell us exactly when the low happens, but historically they've been very useful when you look 1, 2, 3+ years out into the future. So if you're thinking about building a long-term position over the next few months, then this is the kind of thing that actually matters. This video is for information and entertainment only. It reflects my personal opinions and is not financial advice. Check the description for more information. Always do your own research. So the case rests on 4 comparisons: Bitcoin against the Nasdaq, Bitcoin against gold, the realized price, and where we are in the broader Bitcoin cycle. They all kind of point in one direction, and it feels much closer to the latter stages of a bear market than the early phases of one. Shout out to 𝗙𝗘𝗔𝗡𝗗 from Blockworks for some of these charts. Luke is a researcher at Blockworks, really brilliant account. I'll leave his account in the description. Highly recommend you go and giving him a follow, giving him a few likes on this post exactly. Brilliant, brilliant stuff. And this is exactly the sort of research I love, right? Because we're talking about slow, long-term signals. We're not getting lost in the noise of Twitter and YouTube and, oh my God, price is going up tomorrow. You know, it's none of that. Now I can look at this over the next few years and give myself enough time to accumulate a position over the next few months, because I think the risk reward looks better now than it has for quite a long time. Now, I might be right, I might be wrong, but it isn't a knee-jerk decision. It's something where the risk has been heavily considered. I've considered things that might be better returns, and it might go my way, it might not, but the truth is it's much better to buy these things 50% down from the highs than it is when everyone's speaking about it and they're FOMOing at the high. And it's also underneath its long-term power law, tracking incredibly closely to the lower end of it and arguably broke below it. And this is a law that has followed Bitcoin to like a 96% accuracy rate throughout its history. Now, you can't say it's broken yet, but you absolutely can say it's at the lower end of this estimation. And Bitcoin is basically flat against the Nasdaq since 2017. So for 9 years, you've accepted an enormous amount of extra risk, far more volatility, and you've got 0 to show for it. This is a weekly chart, and it takes a 14-week RSI on the Nasdaq relative to Bitcoin, so the ratio between the two, and it smooths it out. So it's a very slow indicator. It's basically useless if you want to know where Bitcoin is going to be on Tuesday. When the reading is high, the Nasdaq has become very expensive relative to Bitcoin. And if you turn the ratio around, Bitcoin has become oversold relative to the Nasdaq. The important level has only ever been reached 4 times since 2010. It happened in 2015, 2019, 2022, you know, typical bear market lows. The current reading is about 72, which is the highest reading in the data. And it's also stayed there for more than 24 weeks, which is longer than the earlier examples. Now, Bitcoin has never been this oversold against the Nasdaq on this time frame. Now, it doesn't mean that it must immediately go up. In fact, it doesn't mean that at all. It can stay down for a very long time. After the signal went off in 2022, Bitcoin still went down another 30% 4 months later. The 30-day returns, the 120-day returns on this are all over the place. They don't mean anything. It doesn't even necessarily mean that in 2 or 3 years it has to reverse. It's just another indicator that's saying, look, it's relatively good value based upon its history. So when you look, you know, 1 year out, 2 years out, 3+ years out, the results are very different in history. Every completed example was followed by a very strong Bitcoin return, and Bitcoin went on to outperform the Nasdaq by a considerable amount. Now, the amount of outperformance has come down every cycle. So each 3-year Bitcoin return was roughly 1/4 to 1/3 of the one before it. Those diminishing returns suggest that Bitcoin's returns are coming down over time, but that's to be expected as assets get larger and more people know about it, more people own it. Now, we've looked at this loads of times in the past, but gold gives you another version of the same thing. The Nasdaq comparison is Bitcoin as a risk asset. The gold comparison is Bitcoin, you know, as money. Gold is money. Bitcoin is a store of value, like gold. That is one of the narratives. So we can compare it against gold as its own narrative as well. In February 2026, gold reached its most overbought level against Bitcoin in the history of the pair. Or said another way around, Bitcoin has never been this oversold against gold. Now, something to bear in mind about this is that Bitcoin's new. It's not very old, and gold is very old. Okay, so gold goes through long bull markets. They can take 10 years in a bull market and can take 10 years to consolidate afterwards. Bitcoin's only been around 20 years. So consider that Bitcoin's early life existed when gold was in a bear market. So Bitcoin's outperformance was enormous, which means that at some point you would expect these ratios to completely flip. Now we saw that this year back in February. So this isn't a slam dunk by any means. It is just, again, another little notch of, okay, interesting data. Look, previous readings around these levels showed up close to major Bitcoin lows. And over the following, again, 1+ years, 2+ years, all the way up to 3 years, Bitcoin went on to outperform gold and obviously the dollar. Now you've got technology outperforming Bitcoin for years. You've got gold outperforming Bitcoin to an extreme we haven't seen ever. Both of those trades have become very crowded. They're the in vogue things. They are the cool things to be in. Now, they are not two totally separate signals. Bitcoin has fallen a lot. So obviously it looks bad against both the Nasdaq, gold, the dollar. So you can't exactly count these things as completely independent variables. Bitcoin's down against the dollar. The other things are less down against the dollar. So Bitcoin is going to be down against these things for sure. Now, there are other on-chain signals we can look at. The realized price is one of these. The realized price estimates the average price where the existing Bitcoin supply last moved. So it gives you a rough estimate for the cost basis of the network. Now, again, it's important to understand that the realized price actually should end up lower than it truly should be because there's a lot of lost coins and Satoshi's coins have never moved. So these are coins that are really dragging this average down. There is an argument that the realized price should be harder to hit cycle to cycle. Now, I'm not making that argument today. I'm just bringing it to your attention. In previous bear markets, the realized price has been hit and it's also been breached. So if Bitcoin were to trade down to the realized price at 53K today and go below it, that would look very normal compared to previous bear markets. And Bitcoin can still be cheap and then get cheaper. Anyone who's owned it for a full cycle appreciates that. In earlier cycles, the first weekly close below the realized price happened in the final part of the bear market. And the market still came down further, still hurt people even more. However, the returns over the next 150 weeks were positive in basically every example of buying underneath the realized price, obviously because Bitcoin's gone up in those years. Again, those returns have come lower each cycle, diminishing returns has been playing out. And then also we've got time, right? Bottoming is a process of time and price. And after the peaks in 2013, 2017, and 2021, Bitcoin had a bear market that lasted roughly 60 weeks. And right now we're about 40 weeks into the bear market. So 3/4 of the way through time, almost 3/4 of the way through the expected drawdown. Now, if it follows roughly the same patterns as before, the low should be set up by November. This is the 4-year cycle. You know, I mean, it doesn't necessarily mean anything, but the reality is it's played out time and time again. You know, it's like ultimate it's like the ultimate mid curve, right? To just think the 4-year cycle can't be true when evidence has said, oh, this is the way Bitcoin has played out every single time. Now, I'm sure there's other factors that are actually influencing it, but still, it is quite mid curve to be like this thing can't exist just because it's a clock. Maybe that's how it trades forevermore. Now, we've only had 3 completed cycles that you can compare it to. You can't build too much confidence around 3 examples, but that is all the data that we have. Right, so it doesn't give you a prediction, but it does give you like, okay, these are the date ranges, and if history is anything to go off, then it should end, you know, roughly October-ish. And so what could the next few years look like? Well, Luke did this research, and he's taken like a probabilistic standpoint of the path that Bitcoin could take from here. They're obviously messy through the end of 2026. Bitcoin could fall again. You know, it's quite likely that it does. It could go sideways for months. It could be recovering from the low now before anybody really trusts that this is the real macro low. But the path becomes much like clearer based upon history, right, and modeling into the future from 2027 out to 2028. So I wouldn't use this, you know, chart as a price target. Again, these things do not dictate exactly where Bitcoin is going to go. It's just a model to say if history is anything to go off, and it might not be. Maybe in the age of AI, Bitcoin is not needed anymore. Maybe that's the case. I don't know. This is what the model is saying. It shows that, look, if cycles behave like the previous ones, buying gradually over the next few quarters has been an incredible strategy. And waiting until Bitcoin feels safe has not. And actually, if you think about the returns as they diminish, when you wait till Bitcoin is safe, the risk-adjusted returns at those levels are far worse. So there's loads of issues in this analysis, right? The samples are tiny. Most of the indicators have 3 or 4 working examples. And, you know, a lot of them aren't independent anyway. They overlap, right? Bitcoin's been falling for a long time. It's going to look cheap against the Nasdaq. It's going to look cheap against gold. It's going to come close to its realized price anyway. You could argue these are all one piece of information showing up in multiple different charts. But this is the reality of markets. They're all priced in dollars. They all get compared one to the other. You know, the market has arguably changed with ETFs and now Wall Street having products in Bitcoin that they can actually short the market effectively, legally. Maybe the 4-year cycle still works. Maybe it doesn't. The reality is, if you think Bitcoin has a place in a portfolio, the other people are going to continue to allocate 1, 2, 3% of their portfolio to it as a monetary debasement hedge, because that is really what Bitcoin is, right? Bitcoin is a hedge against continued monetary debasement. Now, if it remains to be that, and people still think they can store their money in Bitcoin to defend against the devaluation of currency, it should do well. But it needs that belief. It needs enough people to believe that's what it can be. It needs enough people to buy into the system of living, of being external to the continued debasement of currency. It needs enough people to think, okay, this is worth holding on top of holding, you know, AI plays as well. So what do I think? I think Bitcoin is close enough to a major low that I've been deploying capital into it. Now, of course, that doesn't necessarily mean you should be deploying capital into it. You have to make your own decisions about what you think is worth the risk. I don't think anyone can tell you exactly where the low is going to be. And for me, I'm never going to be someone who's buying the exact low. I want to be accumulating in roughly the low-ish area. Now, if I'm wrong, right? But for me anyway, I spend all my time in this space. I kind of feel like it would be stupid of me to be under-allocated to the entire reason for the existence of the space. That's me. This is a separate, this is actually a bias that I've got to liking Bitcoin. Our biases are important to understand. It's of course not 100% of my portfolio. I want to hold assets that are changing the future, AI, assets that are inside AI as well, right? I hold other tokens. I've been saying for a long time, look, I'm quite bearish. When in October, November, when QT ended, for example, I said this isn't the bullish catalyst everyone thinks it is. QT ending doesn't necessarily mean we're suddenly going to go full bull mode when everyone was like, oh, this is the end, this is the start of the restart of the bull market. I said it's probably not. You know, we're probably going to see more pain ahead. Michael Howell's been saying for months, 6 months, that liquidity is tightening and Bitcoin is that liquidity barometer. And I think about what Michael Howell said on the podcast that he came on to my podcast recently. He said we've still got 9 to 12 months of pain ahead. Now, Bitcoin tends to sniff these things out early. So maybe it's 6 months to 9 months of Bitcoin and 9 to 12 months for everything else. Putting exact figures on it is basically impossible. But at some point, you kind of have to place your risk where you think appropriate if you're in markets. Now, of course, you can just sit back and just DCA the index. Most people should be doing that and nothing else. Of course, go speak to a licensed financial advisor for real financial advice. This is just ideas on Bitcoin. This is not legal, tax, investment, or, you know, life advice in any way. And historical performance is absolutely not indicative of future return. Let me know what you think. Is Bitcoin forming a macro low here? Yes or no? If all the comments are saying 30K, 40K next, that in and of itself is often signaling. It feels like everyone's queuing up now to buy Bitcoin in October. Everyone's queuing up to buy Bitcoin in the 40s. Maybe they're right, but you know, generally everyone isn't right. So thanks for watching, guys. I shall see you in the next one. Ciao, ciao.